Hey everyone, welcome back. I have some more updates for you all. It's a very interesting day. We are seeing Bitcoin tank. So, what's going on? Let's discuss it and let's get right into it. The first piece I have here is from CNBC and it states 40% of Bitcoin investors are now underwater. New data shows. It has a couple of key points listed here. It says Bitcoin is off nearly 55% from its November peak, and 40% of holders are now underwater on their investments, according to new data from Glassnode. It says here in the last month alone, 15.5% of all Bitcoin wallets fell into a unrealized loss as the world's most popular cryptocurrency plunged to the $31,000 level, tracking tech stocks lower. It says here Bitcoin's close correlation to the NASDAQ challenges the argument that the cryptocurrency functions as an inflation hedge. All right, let's get into the article now. Again, it states Bitcoin is off nearly 55% from its November peak, and 40% of holders are now underwater on their investments, according to new data from Glassnode. That percentage is even higher when you isolate for the short-term holders who got skin in the game in the last 6 months when the price of Bitcoin peaked around $69,000. In the last month alone, 15.5% of all Bitcoin wallets fell into an unrealized loss as the world's most popular cryptocurrency plunged to the $31,000 level, tracking tech stocks lower. Bitcoin's close correlation to the NASDAQ challenges the argument that cryptocurrency functions as an inflation hedge. It says analysis from Glassnode also noted an influx of, quote, urgent transactions amid this latest sell-off, in which investors paid higher fees, indicating they were willing to pay a premium in order to expedite transaction times. The total value of all on-chain transaction fees paid reached 3.07 Bitcoin over the last week, the largest yet recorded in its data set. There's a quote here, and it states the dominance of on-chain transaction fees associated with exchange deposits also signaled urgency to continue the report, further supporting the case that Bitcoin investors were seeking to de-risk, sell, or add collateral to their margin positions in response to recent market volatility. It says during this sell-off over this last week, over $3.15 billion in value moved into or out of exchanges, the largest amount since the market hit its all-time high in November 2021. Most wallet cohorts, quote, from shrimp to whales, have softened in their on-chain accumulation trends, according to the report, referring to both small-scale and large-scale investors. It says wallets with balances of more than 10,000 Bitcoin have been a particularly significant distributive force over the last few weeks. And while there is more conviction among retail investors, data shows that those holding less than one Bitcoin are the strongest accumulators. The accumulation among these smaller scale holders is notably weaker than it was in February and March. It says Fundstrat Global Advisors is calling a bottom of around $29,000 a coin, and the firm is now advising clients buy 1 to 3 month period, put protection on long positions. So, Bitcoin is down bad right now. And I just want to speak on something just for a moment. Now, I think, listen, every market has cycles, and I want to bring people back down to earth here, because one thing that I have learned in this market is it's unpredictable, and not only that, it's also unprecedented. There has been so many people who have been able to generate wealth, not just become rich, but generate wealth because of Bitcoin. And there's also people who have unfortunately lost a lot as well. And one thing that I'm always asked by my peers, associates, and colleagues is, hey man, what happened? why is it going down? And sometimes there is, a lot of negative news cycles that occur, or, maybe a government came out and claimed that they are going to ban it. But the reality is this: the crypto market as a whole, it's just a market, and markets have cycles. Markets move, and it's just that this market is very volatile, and it really takes people who have that high risk tolerance to be able to enter it and remain confident in the fundamentals of it in order to be able to really hold it or hodl it long term. So I'm going to jump to this other article here by Fortune. It states here Bitcoin's price is now 50% down from its peak as the crypto plunge continues. It says Bitcoin continued its steep fall into Monday after a rough weekend, dropping 5.2% over the past 24 hours to $32,940 at 7 a.m. Eastern time. This marks the fifth consecutive day that Bitcoin has been down, sending its market price to less than half of what it was at its all-time high of $69,000 in November. The fall isn't exclusive to Bitcoin. It also has here Ethereum, the second largest crypto, also fell by 5% from the start of the weekend to $2,440. It says since Friday, Bitcoin has broken below its 3-month rising trend line, falling out of the $35,000 to $46,000 range it has bounced between in the first few months of 2022. Analysts are now indicating the fall in prices could be the start of a new market trend as Bitcoin's valuation approaches the lowest level it has been since July 2021. It says here Idul Patel, Chief Executive Officer of Mudrex, an algorithm-based crypto investment platform, told Bloomberg, quote, the downward trend is likely to continue for the next few days, he said, noting Bitcoin could test the $30,000 level. So, there's another interesting piece here. I'm going to read this real quick. It says, as institutional and professional investors moved past cryptocurrency's volatile nature and began to dominate the market, prices of Bitcoin and other cryptocurrencies have increasingly begun to move in tandem with the market. With Bitcoin's 40-day correlation with the S&P 500 benchmark at a record 0.82, according to the Bloomberg data, any shock that leads investors to retreat to safer corners of the market tends to hit riskier tech stocks and cryptocurrencies worse than other assets. There's another paragraph here. It says, after the Federal Reserve indicated it would raise interest rates by 0.5 percentage point on Thursday, the largest increase since 2000, to battle inflation, the U.S. stocks futures fell and government bond yields rose. European and Asian stocks also pulled back on Monday. The pan-European stocks 600 slipped by 1.5% by late morning, and Japan's benchmark Nikkei index fell by around 2.5%. The Nasdaq Composite, a tech-heavy benchmark, closed below 1.4% on Friday, bringing its year-to-date fall to 23.3%. So I know when we see price movements like this, I know it's scary, and it can definitely make some people start to feel and or think negatively about the prospects of Bitcoin and crypto in general. But but remember what I said in my first video. When I spent 6 to 8 plus months doing, a couple of years ago, I was flying around the world working for a large tech company that had me on the ground setting up servers, network switches, firewalls, fiber cables, and all of that, fun, cool stuff that sits in the data center, just so that a select few of companies can store their crypto on there. specifically Bitcoin and some of the other, blue chip cryptos in the space. Uh, this is this is not a game, and I hate to see people get so discouraged and defeated over a quick downturn. Yes, Bitcoin could absolutely, in theory, continue to go down, but so what? I think people need to ask themselves, what am I in it for? The institutions, the accredited investors, the venture capitalists, the hedge fund managers, they are not trying to get rich quick. They are trying to help themselves and their clients build wealth. And one thing that I have learned about this is it takes time. So I wanted to speak on this for for a minute because I know people are nervous. The current economic climate is shaky today, and people are scared about, the environmental effects of Bitcoin. There's been a lot of fear, uncertainty, doubt around that. But I think people need to just stick to understanding the fundamentals. People need to relax and just realize that markets have cycles. All of them. All of them do. Not just this market in particular. So